Alan Neckman of Agora Financial joins us now for the final trade of the day and the weekly options alert. Good to have you on the show.
Hey, Ange, we saw a price pause yesterday, but not before we made new all-time highs again. So it's been a streaking stock market. The S&P 500, 3,500 is what I'm sticking to, and it looks like that's where we're going next.
As a trader, how are you playing this game?
Well, we've got just some December plays. We've got Baxter last week we put on, and that position gained 50%, so we took off half that position there. We've got some WB. We need to see it go back and fill that gap up above. Alcoa still trading sideways. We want to see breakout above 22.5.
Okay, what else is on the table for you?
January options. 2 months of time, so plenty of time. BP, we want to see that have another breakout here, and the Cleveland Cliffs, which had moved near 8, it's still sitting near its break-even point right now.
What's your trade trigger for this week, Alan?
Commodities come back. I've said this before here. It all comes back to commodities, so this is a sector I keep an eye on. CF Industries is the company. They're nitrogen fertilizer. Now this stock is essentially unchanged over the last 52 weeks. Now it's also 15% off its highs, which were just made in August. So the option play there is the January 42.5 call. The low on this is around 40, traded between 40 and 45 for 6 months, and now it's come back down to that 45 breakout level. So this is a good area to be buying, and if it get back to that 50, then this option will gain nearly 100%.
And again, you have a lot of time here.
2 months and more.
And more. Let's get your trading floor takeaways.
20, 25, 30. I don't know what the next in that cycle is, but that's the Dow up 20%, the S&P up 25%, and tech up 30% in 2019 alone. Gotta like that.
All right, number 2.
High hurdles. So we had low hurdles when it came to this earnings season, and we've overcome, and the market's making new highs. So we're looking for a negative 4% earnings growth, and it came in negative 2%. So half as bad, I guess, or I guess half as good, but it doesn't matter because the markets have reacted positively, and that's why we're at new highs.
And then number 3 is negative positive.
Yeah, a negative can be a positive. So the president this week had been talking about negative interest rates with the Fed, which is interesting, but that is another form of stimulus. So that shows he's very, very, very interested in seeing this stock market boosted.
He does like a stock market that is in rally mode. Good to have you here. Thank you.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.